Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday, the 7th of September, and we have back our regular guest, David Kuo, founder of the Smart Investor out of Singapore. David, good afternoon and great to have you back.
Selamat tengah hari, Brian. Let's hope that I haven't forgotten how to do interviews, yeah?
Now, David, before we get your sagely advice, let's take a look and see how the numbers stack up across the region. We're going to start with Singapore. The Straits Times Index is down 0.28%. Bursa Malaysia is up 0.09%, which bucks the trend because there is a sea of red across. Shanghai is down 0.6%. ASX All Ordinaries is down 1.26%. The Nikkei is down 0.71%. The Hang Seng is down 1.01%. And rounding up the numbers, we've got the Kospi, which is down 0.77%. David, your view on market performance in the first half of the day?
I think we're just playing follow the leader, Brian. It wasn't a great day over in America because people are very concerned at the moment that maybe interest rates may have to go up again. So consequently, there was a dumping of Malaysian shares. The dumping of American shares. And then that just followed through over here in Asia. The Malaysian stock market is actually, as you quite rightly said, is a standout. And it's quite interesting. People are beginning to get confidence in Malaysia. I mean, following the state elections, and then now there are these processes in place, by the Prime Minister, the Anwar Ibrahim administration, and people are beginning to show some kind of confidence in Malaysia, and they're hoping that Malaysia can attract those large multinational corporations, just as they seem to have inked some kind of deal. It isn't actually, the ink isn't dry yet, but it looks as though Elon Musk with his Tesla and Starlink could be heading over to Malaysia. And if he does, others might follow, Brian. So it could be fine days ahead for the Malaysian economy and for the Malaysian stock market.
And David, what you're just saying echoes what some of the other guests that have been on some of our shows have said. So, for example, some of our technology shows, where we generally interview APAC leaders of large corporations, normally New York Stock Exchange or NASDAQ listed companies, that overall sentiment around Malaysia is definitely more positive.
Well, I think what people want is consistency, and what they don't want to see is a continual change of government. And maybe people are going to give Anwar Ibrahim the benefit of the doubt and say, we'll give you your full term, and let's see if you can deliver during your term, and let's hope that things are a lot better at the end of your term. And I think this is really what businesses want. They don't want this continuing changing of ideas and changing of policies. And maybe I'm 3 years too early, Brian, because I started investing in Malaysia about 3 years ago. And I have to say that it's been 3 years of, I wouldn't say disappointment, because I mean, those companies have continued to deliver the dividends that I require. The share price hasn't been great, but as an income investor, the dividends are more important than the capital gains. And so I haven't been totally disappointed by my investments in Malaysia, but maybe from here onwards, we might see some capital growth with investors coming in and going into the stock market. There was something in the Business Times today talking about Malaysia could actually be the center for medical tourism in the future. And maybe they might steal Singapore's mantle as far as medical tourism is concerned. So I think things are looking up for Malaysia.
Now, looking at Bank Negara's interest rate decision this afternoon, what are your thoughts on that? And are central banks around the world perhaps now wavering in their fight against inflation?
It certainly feels that way. Well, we'll be getting Bank Negara's decision at 3 o'clock today. Generally, people think that the interest rates will remain unchanged. And so there's going to be no changes from Bank Negara. But the thing is, Malaysia doesn't really need to increase interest rates. At least the numbers don't seem to suggest that they need to increase interest rates because the interest rate is higher than the rate of inflation. But I was quite surprised yesterday when the Reserve Bank of Australia left interest rates on hold. And when I have a look at what's going on in Australia, interest rates at 4%, inflation rate at 6%. That doesn't make any sense to me. And maybe, central banks are getting a little bit concerned at the moment that maybe if they increase interest rates too far, then it could drive their economies into some kind of economic slowdown to the point of recession. And maybe they are erring slightly on the side of caution and saying, what if we don't increase interest rates? Will inflation keep on coming down? And my answer to them is, no, it's not going to happen. You're going to have to increase interest rates if you want to drive down inflation. Inflation is not going to come down by itself. As we saw yesterday, we had these services number come out from America, and services is expanding over in America. And we also have things like oil prices, which is climbing. Not only in America, but the rest of the world. So these are all going to feed into the inflation numbers, and the central banks need to be aware that they need to be ahead of the curve rather than to actually be behind the curve and then suddenly find they need to increase interest rates faster. So maybe it is better if they deal out the tough medicine now rather than to actually have much tough medicine, much more bitter medicine later on.
And David, I want to add one more thing to that. It's something we've talked on the show very early on since March, rising food prices. And that's really going to play down, particularly in the Asia Pacific region, where rice prices have gone up 30% since the start of the year.
Well, it's not helped, by certain countries saying that, they're going to restrict the amount of exports of their rice grains to the rest of Asia or to the rest of the world. That doesn't help. And that is also going to fuel inflation. So you're quite right. And the thing is, when it comes down to food, it becomes a very sensitive topic because people in some places say, I don't really care too much, if we have asset price inflation, if house prices go up a little bit too far, or if stock markets go up too high, or if car prices are too expensive, COE prices are too high. They don't really mind too much about that because it doesn't really affect them. It doesn't affect the ordinary person. But when you start talking about rice prices going up, then of course, people start to get very touchy, very sensitive, and they're going to say, hey, what exactly are you doing? What is the government doing about this? And what are the central banks in their regions doing about trying to sort of clamp down on inflation? But this is going to be a problem, Brian.
David, then as investors now in these volatile markets, and you wrote an article on investing in volatile markets on the Smart Investor. Tell us then, what do we do?
I'm a great fan of business channels and I love to listen to what people have to say. But what really gets my goat sometimes, Brian, is that you get an expert come on and say, I think that interest rates have probably peaked. And maybe now is the time to actually start going in and locking in those high coupons, those high yields that bonds are offering you. So they dump their shares, Brian, and they actually go and buy bonds. And then the very next day, another expert comes along and says, oh, I tell you what, I don't think bond prices, I don't think interest rates have peaked at all. And suddenly they flip-flop. They go from one to the other, and they're continually sort of readjusting their portfolio. My take on this is, look, you need to know where you are now, and you need to know where you need to be in 5, 10, 15 years' time. And that will tell you how much you need to invest and in what you need to invest. You don't keep on sort of changing directions all the time. It's a bit like jumping into a car and then somebody says, where exactly are you going? And you go, I don't really know. I mean, that isn't very helpful, is it? I mean, you need to know where you are now, where you need to be, and how long it is going to take you to get to where you want to be. And that is really what investing is all about. And that is what I'm trying to tell people, that, yeah, we're going to get a lot of noise in the market, but don't react to every expert that comes on. And I know you have lots of experts that come onto your show, Brian, but don't react to everything that they do. By all means, take on board everything that they say, but at the same time, be aware that you need to know where you are now, where you need to be saved by the time you retire, and how much you need to invest during that period. It's as simple as that, Brian.
On that note, David, thank you very much for your insights. Thanks for coming on the show.
You're welcome.
We've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.